Hey, good afternoon, stock investors. It is Tuesday, December 30th. You've got an hour of trading on the New York Stock Exchange left today. We've got a full day tomorrow. And it looks like the market's going to perform well this year. It's going to be around 17, 18% rate of appreciation overall performance on the S&P. That's a really good year following two superb years. So congratulations if you're an individual investor. I hope you made lots of money. I had a very good year this past year and a very good run for the last 3 years. So it's been a good time. Is it going to continue into 2026? Well, it may be that we begin the year with some pressure. I'm seeing that the Santa Claus rally is not really doing much. Today, it's pretty flat, a little bit negative. Yesterday was negative. Not all that bad, but it was negative. And that fade into the end of the year compels me to think, you know, it's probably going to be a lower start to the year. Investors that are sitting on really good gains, if you think about the gains that are out there, look at the S&P over the 5 year from the end of 22 to where we're at now. The S&P is up well above 80%, and that's the whole S&P index. Just think about, hey, somebody's sitting on 300%, appreciation in an individual stock. They're beginning to get a little squirrely, like, hey, maybe I should sell some of the shares. Maybe I should sell half the shares. Maybe I should sell all the shares. Maybe an investor is getting older and they want to reduce the risk of their portfolio. Well, the difference between selling right now, today, December 30th, or tomorrow, December 31st, and selling just next week is a big difference when it comes to taxes. If you sell right now, you're going to pay taxes in the next 2-3 months. But if you sell in a week's time, you don't have to pay taxes for at least a year. You'll be waiting around to pay the tax man way over in 2027. And I think investors are probably thinking along those lines. So I expect there will be some selling of stocks from that type of investor that's sitting on really good gains. And they want to bank those gains. A gain is not a gain until you recognize it. So we'll see if there's a lot of that. I'm expecting some. And if we have a negative January, so be it. Let's take a peek and see how last year turned out. Last year, I think if I think about where we were last year, I was probably thinking to myself, we've done really well. If we have a pretty strong sell-off in 2025, because I was, thinking to myself in 2024, I can understand it. We had a massive sell-off, but that was really done or created by the whole tariff scare. And then we rose up higher. So when we look at the beginning of the year, we had a little bit of a sell-off and then we kind of went up. So from the beginning, for the first full month, we were up about, nearly above 2%, 2.7%. So the market kept going higher. I don't know if we're going to repeat that. I would venture to guess that probably going to see some pressure in January, just from sellers trying to cash in on their stocks. And that's fine. Whether the market's selling off or rallying higher, I've got a plan. And that plan is really around finding the right stocks that are priced right, that are set up right, that are a good investment for the next 12 to 24 months. So I'm always doing research to try to figure out which ones are those stocks, which ones are the ones that are worth buying, which ones should I sell a bit on. And that's what this stream is going to be about. It's about looking at individual stocks, or maybe talking about stocks. I could talk ETFs too, and maybe organize a plan for 2026, how you can invest, how I could invest, and be more successful in the 2026 year. So if you have a question, put it in the chat. If you'd like me to look at a stock, put it in the chat. The rules of engagement on stock analysis is that I'll analyze stocks for members, no additional fee. You pay a subscription. That's awesome. Thank you. If you're not a member, no big deal. Buy a $5 super chat and I will analyze that stock. And that's how we will go about that. If you have questions around investing, love to see those. Feel free to ask questions. I could discuss it and we will go there. So looking at 2026, just talked about how some investors might be redeeming those gains, cashing those in. Other things that may come into the picture that will really affect the year is, will the AI trade continue to work? At this point, I think the market investors are waiting to see, are businesses that are pouring a lot of investment in AI seeing the return on investment. Now, we know certain businesses are just investing so they can have a certain share of that market. OpenAI, Meta are two examples. They just want share of that market. But let's go beyond that. Are other businesses like, let's say Caterpillar, they do tractors and big machinery. Are they putting any money into AI? What about, other industries and businesses? Are they putting money into AI? Because it's really not going to be a long-term big success story if only a couple businesses are really adopting it and using it. So we'll see. I think 2026, the expectations will be higher of what we should see from a return on investment for businesses that built AI applications and AI chat bots and that kind of thing. It'll be interesting. I think that story is going to move stocks in 2026. We also have midterm elections, and I'm going to ask Gemini how stocks trade on midterm election years. So my question to Gemini, do stocks go up or down on midterm election years? Let's ask Meta, see what it says. So according to Gemini, I don't know why I was thinking Meta. Gemini is saying this: historically, the stock market has tended to see weaker performance and increased volatility during the first half of midterm election years. Interesting. But generally finishes with positive average annual returns. So the beginning of the year, especially when we start hearing some stories like, this side's going to win by a landslide, and they're thinking they're going to change things in this way. And then, a couple weeks later, it's the other side is kind of going to win. And they're going to change policy along these lines. So that kind of swing in, I guess, sentiment, expectations is going to create volatility, the unknown. Now, average annual returns have averaged up 4.6% in midterm election years since 1948. Of course, that would be much lower than we've had in 25, 24, 23. Intra-year volatility, higher volatility. I'm not sure I understand this phrase. Midterm years are typically characterized by higher volatility with average. Okay, now I'm catching up here, folks. So just overall, most of the time, no matter if it's midterms or no midterms, the S&P goes up by 4.6. But when you have the midterm years, the declines could be around 19%. Okay. And then post-election, once we know what we're dealt with, we can see a rally. Now, I'm not sure. I don't really make elections and so forth a big part of my investing approach. I want good businesses. I want businesses that are growing top line revenue, that have the right profitability, free cash flow generation, excellent balance sheets. And preferably, I'd like a government that's, pro business, that helps businesses grow so they can make better products that'll give people value, services that are the services that people want, that kind of thing. That's my preference, but you don't always get that. So I invest, really focused on the things that I can make a decision around. That's valuation. That's buying at the right time. So it'll be interesting to see how the midterm elections affect stocks. But at this point, it looks like Gemini is saying we could see lower stock prices in the new year due to that midterm election. What do you guys think? Do you think the midterm election is going to reduce stocks, increase stock prices, or no effect? What do you think? Put it in the chat. I'll read your comments if you comment on that question. Looking at today's trades, there's a couple green boxes here. Looks like Meta is up nicely. Meta announced they're acquiring a company that does AI, and it's a consumer app that does AI. So the market likes what it's hearing, seeing there. Uber's up. Utilities are up, nice and green. And utilities have been up on a couple of occasions this week. Energy has as well. Oil prices have been going up a little bit. So that looks good for oil companies, for energy companies. The healthcare space picked up a bid. There was a big story. Michael Burry believes that Molina Healthcare is going to be a big success story. It's going to really reward investors. And I've looked at Molina Healthcare. So Michael Burry believes, hey, this is going to be a very, very good business. It is very sold off. What does Molina Healthcare do? So Molina Healthcare provides managed healthcare services to low-income families and individuals under the Medicaid and Medicare programs and through the state insurance marketplaces in the United States. It operates in 4 segments: Medicaid, Medicare, Marketplace, and other. The company was founded in 1980, headquartered in Long Beach, California. It's got a lot of employees. The way that I understand Molina is they are big players in the whole Affordable Care Act, where you have subsidized health care, you have lower income people, and it's a good idea to have people insured. That way they can take care of themselves. These guys have sold off. There's been pressure on health insurance companies, and this one has been under a lot of pressure. So it's interesting to see that Michael Burry is betting big on Molina Healthcare. The PE ratio on Molina Healthcare is 15, which isn't high, it isn't low. We'll see how they're growing. 19.65% discount according to analysts. We look at how they've been growing. Here's their revenue growth. Revenue will tell us, are they selling a service that more people want? Do the existing customers want to buy more of it? It's a positive. This particular metric is important to know. Is this business flourishing or is it struggling? In the case of Molina, this is a pretty big company. This is 42.8 billion in revenue, and it grew by 14% in the trailing 12 months. That looks good. This is an insurance company, so it's not going to have really high margins. It's going to have low margins. Its cash flow has gone negative, which is a concern for me. I like seeing cash flow, and these guys don't have any of it at the present time. The operating margin has gone down. The cost of doing business is going up for these guys. They do have a profit margin, but it also is lower than it has been over the last couple of years. So the metrics are not looking good. I think there's other health insurance payers that have better metrics. 12 analysts cover the stock, and they have a pretty broad range of what they think the stock is worth. And when we look at their forecast, they're growing quite a bit here in 2025, 2026. They're going to grow, but not as fast as they are growing in 2025. Now, this forecast looks good. They're already a big company. Okay. And their profits are under pressure. You see that they're down almost 30% in the current year. So their cost of doing business has gone up. And the way the stock sold off, that is rational. Okay. Profits are down, stock sells off. That makes total sense. When we look at the future year, which is 2026, starting on Thursday, it looks like their profits are going to be under pressure, going down about 5%. P ratio looks pretty sensible. They are growing. If they can get back into a profitable mode, a mode of creating free cash flow, these guys are going to be fine. That's just not my favorite health insurance stock. It's Michael Burry's favorite stock. Let's take a look at the balance sheet just to see if they have a debt problem or no debt problem. And they have far more cash than debt, so there is no debt problem. They have plenty of cash to pay off debt. Looks good. So Molina is not my favorite stock. I think for health insurance, I like United Healthcare. I also like Oscar Health. Oscar's growing really fast. It could really be a great stock that could be a multi-bagger, maybe be 5-bagger, 10-bagger, but it could really go really high because of its growth. Molina doesn't grow that fast, and they're going to be kind of a slow grower. Their profitability isn't as good. I like United Healthcare's numbers. United Healthcare is also under pressure for the past year. And these guys are gigantic. Market cap $302 billion. The stock is up 1%. Its forward PE is 19.74. Analysts think there's a discount. Looking at how they've been growing the revenue, and these guys are gigantic, $435 billion of revenue, growing it by 10.5%. What that means is they're adding $43 billion to that top line when they grow by that rate. And that's almost the equivalent to one Molina Healthcare. That's how big they are. And this number to me is impressive that they're growing that fast. They're growing that fast. What's going on with their profitability and cash flow? Cash flow is been going down a little bit, but it's still really high. It's 17.3 billion. The operating margins are under some stress, down to 6%, much better than Molina. Profit margin at 4%. These are health insurance companies, so they don't make a lot of profit. They're just big and they crank out cash. Here, the cash flow has gone down to 4%. So this is kind of a down year. I think the future looks better for United Healthcare. One of the things I like about stock analysis is they provide a really nice forecast section when you go into this particular tab. And this is very useful to me because it shows me how are they going to grow the business. It looks like in 2026, they're going to grow a tiny bit, but they're a big, massive business. Then they're going to get into a 5%, 4%, 8%, 7% growth. Okay. And their profits are going to expand nicely. 2026 profits are going to expand by almost 9%. That's 17.25. So I really like this forecast of expanded profitability, bringing down their PE ratio. And United Healthcare is receiving a lot of investment from big investors like Warren Buffett, David Tepper. There's some big investors buying into United Healthcare. So this is the one that I'm invested in because I think the numbers are just better. I understand this business better. And I think United Healthcare is going to do well. Over the past month, it's close to even. But really next year, that's when we're going to see if healthcare is going to work, or at least health insurance payers are going to work or not. We'll see. Tune in. I will be covering it in the future. All right. So I covered healthcare there. And good to see that it's catching a nice little bid there. That looks good. Let's take a look at Meta. Meta's been under a lot of pressure this year. It started off the year doing great. Then it announced a quarter ago that, hey, we're spending a lot of money on the data center, trying to be a strong AI player. And the market didn't like it. Sold off the stock. It was trading at 750. It sold it off to 600. That was a big haircut. Stock's up since then because the market realized it was oversold. Second, Meta has come out and said, we're not going to spend as much as we had originally stated in our earnings call. We're going to lower the capital expense that we're planning to spend. And the market did like that. So over the 1 month, it's up about 3%. And I think Meta can go higher. It is a big cap. It's one of the big caps, $1.68 trillion. But its forward PE is quite sensible at 22.6. Most of the big caps, if you look at the mega caps, let's take a look at PE ratios. So you have NVIDIA at 26.8. This is forward PE. Apple at 33, and they're not growing. Google is doing really well, but they're up 65.86%. They're almost at a 30 PE. Microsoft, 29 PE. And Amazon, 31. Then you have Meta, 22.6. Out of the most valuable companies, Meta has the most attractive forward PE ratio. So that looks good. Looking at the 5-year, these guys have been a terrific stock, especially if you bought shares back in 2022. You're sitting on a really nice gain. So Meta is going to be fine in 2026. I'm a big investor in Meta. Got no worries. I think they have a terrific business. It's really strong, and customers like using their apps. They're not going anywhere. Advertisers like to advertise on Meta. They get good return on investment. Looking at the forecast, analysts, 71 analysts. That is a lot of analysis going into this particular forecast. 18.2% growth, 15, 13. It's a big outfit. $240 billion in revenue. That's big. They have huge margins, terrific cash flow, and their PE ratio will drop unless the stock price rallies. I think Meta should be trading mid-20s minimum. So I think this stock's going to really work in 26, 27, 28. So stay tuned. The market will be trading Meta in 2026. I think it's a good one. It's a good one that's out there. It isn't priced too high. All right. So we are at 3:24 p.m. Eastern. The market is pretty much flat, slightly negative, but not really. It's just been hovering around the same price it closed yesterday at. Over the 5-day, the whole Santa Claus rally thing faded. You know, Santa Claus handed out the toys and then boom, that's it. the Santa Claus rally faded. It was looking a little bit better as we went into the holiday, but it'd be perfect if it continued to go higher, but it didn't. That's just reality. So that's what's happening with the index overall. No other big stories. The Meta acquisition was a big story. See if I'm missing any stories that are worth talking about. There is a story around Bitcoin that I'm thinking it's not a story, it's more of an observation on my behalf. When I think about Bitcoin, it's down if you look at the year to date, and it's really at times flourished. Let's take a look at the year to date. It's down if you measure from January 1st, 2025 to where we're at now. It's down 5.73. But you could see that at times this thing was really high. It was up at $124,000 per Bitcoin. And now it's down to 88,000. So this big sell-off has put pressure on companies that are really tethered to Bitcoin. A perfect example would be Strategy. They're really tethered to Bitcoin. But also riskier stocks. Bitcoin's almost kind of a signal that investors are taking on risk. They want big returns. If Bitcoin is rallying, investors are buying in. If Bitcoin's going the other direction, investors are a little scared. They want safety. And for sure, this decline here that we've seen of 29%, that's a pretty good drop in Bitcoin. So it's showing that, hey, there's some fear out there. And I think Bitcoin's going to continue to be that signal to me that, hey, if it starts going higher, that means risk takers are out buying stocks. If it keeps going lower, that means investors want to buy safety stocks. So we'll see where that goes. Ben 10, how are you, sir? You want to look at FTAI. Let's take a look at FTAI. And today is a day when I can take my time when we analyze things. And I'm going to go all the way on this one if I can, if they have numbers that I can analyze. FTAI Aviation owns, acquires, sells aviation equipment for the transportation of goods and people worldwide. It operates two segments, aviation leasing and aerospace products. The aviation leasing segment owns, leases, manages, sells aircraft and aircraft engines. That's right. Yeah. Okay. Yeah, it's interesting. They'll lease the aircraft. They also lease the engines, which is pretty neat. All right. So $20 billion company. Year to date up 35.7. The travel industries are doing well. People are traveling. The airlines, I saw an interview with the CEO of American Airlines. It was an interview from earlier this week. And he was saying that they're having record number of seats sold, and that 2026 looks really good. So they should have a prosperous 2026. So there is no recession happening in travel right now. It's also tells me that the consumer is doing all right. If consumers are willing to spend some money traveling, that's all discretionary spend, meaning it's not the food you got to eat and the rent you got to pay or your mortgage. It's not the essentials, right? Like the auto insurance. No, it's discretionary. That consumer is making a decision. Do I go on a vacation, or do I put it in the bank, or do I buy myself a new electronic device? It's discretionary. So it's kind of a good signal that the economy is doing all right. FTAI is leasing to these airlines, and the airlines seem to be doing well. So looking at the trailing 12 months, this business has really grown. Wow, that's good growth. And on this stock, I'm going to look at their income statement that they actually produce from their website, their investor relations website, because I want to see how they structure their income statement. This is a business that's a hybrid, right? They're in aerospace, but they're not. They're more like a leasing company, very focused on this particular industry. But the growth is phenomenal. Look at that growth. Looks really good. Okay, so they are growing. Are they profitable? Let's take a look. So they're growing really fast. So they're probably putting a lot of equipment into service. They're probably reconditioning those engines that go on aircraft. So they're putting a lot of cash into the business. Their gross margin is 41%. It is kind of a lower gross margin than they had in 24 and 23. They are profitable, real good profit in the trailing 12 months. And again, they're burning cash. It seems like they're growing. So here we're going to be able to value the stock based on earnings per share only. All right. So when we look at the forecast, 9 analysts cover this stock. We've got an analyst that believes this thing can go up to $306 per share. Another analyst believes it could drop. When you take the average of all those price targets, it shows about a 3% discount is available on this stock. And when we look at the forecasts of how they're going to grow, we're in this year, fiscal year 2025, moving to 26, they're going to grow by 25%. That looks good. 21%, and then have a flat year. So they're going to keep getting bigger. Okay, that looks good. Profitability is going to expand. So these guys, I mean, they're growing really fast. The P ratio that they're going to get for forward PE for 2026, 27.86. I think this one's priced well. It's probably priced at a discount. We can calculate that. So let's do that now. So what I'm going to do is I don't have a business similar to theirs. And I'm trying to think if there's a business like theirs, and I don't have one. I mean, I don't have aircraft leasing companies. So let me see if I've got something similar to it just by scanning. These are all software businesses. This one is it's close enough. So Samsara does Internet of Things, but we're not really going to use the free cash flow model anyway. So let's just kind of make a little room. And I'm actually going to use this section. This is the only section I can use because they don't have free cash flow. And it's really hard to develop kind of a logical forecast for a company in the condition they're at, because you have so many variables. Okay, so I'm going to look at the data I was just showing you on a different screen so I can update this model that you're seeing, and we'll complete a valuation based on earnings per share. So the earnings per share expected, and we've got a good number of analysts putting in their forecast, 13 analysts, is $7. So we'll put $7. I think they deserve a PE ratio since they're growing. They're growing well, 32. And the growth from 26 to 27 on the profit is going to be 33.8, followed by 1%. So I'm going to keep it at 20%. That's fine. So each share And let me make sure of something. Yeah, my share count is not correct. Let me update that. So the shares outstanding 102.57. Okay, and disregard this because they don't have any cash. So we can't use the cash forecast. We can only use this section. And that didn't change it, so that's fine. Value per share. Okay. So if we just look at earnings per share, this stock's discounted by 27%. So it could keep going higher. How's this stock been moving? Has it been run up or? So it sold off at the beginning of the year. This was at the very beginning. There was kind of some kind of scare. Then a lot of stocks sold off around this period. But from there, man, you could have made good money on this stock just from here, let's say, to where we're at now. This thing's really gone up. It's gone up 73.9% from that point. So this one was a really nice pickup. It's bid up quite a bit, right? So is it going to keep going higher? It could. I mean, look at this graph. It's been a real good winning stock. Yeah, for sure. So it is discounted based on earnings per share. It's had a very, very good 2-year run. I mean, it's gone up 324% over 2 years. That's phenomenal. So I wouldn't buy into the stock. I think it's hard to analyze companies like this. It's already been bid up so much. If you have any kind of hiccup, you see where the market's really gotten nervous with the stock. For a while, it was just going up and up. And the travel industry came out of COVID kind of, really handicapped during COVID where we couldn't travel a whole lot. But then travelers and consumers really wanted to travel because we were cooped up for how long? A couple of years. So they really wanted to travel. And they started to lease out more and more aircraft to try to meet demand. And these guys really cleaned up. So I wouldn't invest in this stock, but I could understand if somebody really liked the stock, wanted to buy into it. If somebody invested at some point anywhere here and wanted to hold, I could understand that too. But that's my analysis on FTAI. That's an interesting company. It flourished. It made a lot of money. Incredible. And I'm going to delete this guy because that's a very niche business. And that's my analysis. Ben 10. All right. So we went over that stock. Ben's got a couple comments here. Interactive Broker is. Yeah. So you want to look at Interactive Broker, the valuation. The brokerage stocks have been doing well. Now, I'm going to guess based on, I own Robinhood. And Robinhood's kind of been under some pressure lately. And you saw where Bitcoin was trading. So there's not a lot of trading going on. But if you look at Interactive Brokers, I have a 34% discount on the stock. This is a little dated. So let me double check my numbers here. I'm going to open up the data on Interactive Brokers. And in fact, let's try this for a second here. I'm going to open up I'm going to open up Gemini. I'm going to ask Gemini for the data and see if it gives me the correct data. I've been wanting to test that. I have that on my to-do list. I've been testing it like every 3 months or so. Hey, is AI ready to give me exactly the numbers that I want? So we're going to update Interactive Brokers together here and see if we can get a new valuation for Ben 10. So the date, I can handle the date, of course. All right, so this is the Gemini app. I'm going to open up a separate little browser here. Can you guys, am I squeezing it in here? Yeah, we're looking good. We're looking good here. Okay, Meta. I keep calling it Meta. Not sure why Meta's in my head. All right. So what I went with Interactive Brokers was a 3-year free cash flow average. And so let's go with what is the free cash flow? And with AI, I think valuing stocks is going to be easier to do. But always remember that you always want to be able to understand every number that you're calculating, because interpreting the numbers is crucial. So, hey, am I looking at a good company or a bad company, and so forth. So their trailing 12 months free cash flow as of September 2025 was 15.98 billion. And the reason I went with a 3-year average is because that number is so big that the brokerage companies are having such a good year. I would probably get an exaggerated valuation because they'll have good years and bad years. So I went with a 3-year average. I'm going to stick to that. But good job, Gemini. You got me that number. The other number we want to look for is weighted average cost of capital. I'm not going to look that up. Let's look at cash. So what is the cash on the balance sheet? All right, what's the cash on that balance sheet, Gemini? So cash and cash equivalents, 5,130,000,000. All right. And what is a debt? So the task of going and getting the financials and then reading these figures out, it was made easy by platforms like Stock Analysis and Yahoo Finance. But now with AI coming out, it's going to be even easier, because you see what I'm doing. I'm just asking Gemini questions. Get me this information. It got it for me. We're still at basically 900 million in debt. So actually 0.9. So that would be, yeah. So Interactive Brokers is discounted by 39%. If we look at the value of the company based on free cash flows, taking a conservative approach by using a 3-year average. If I would have used their trailing 12 months, it would have given me a number that'd be like really, really high. But you gotta think about, hey, for the next couple of years, are they going to perform as well as they performed in 2025? Well, probably not, because it was a booming time, right? 3 years in a row. Stocks going up. All right, Gemini, you're not done yet. We're going to keep asking you questions. What is the forward EPS for Interactive Broker stock? So the analyst consensus estimate for Interactive Brokers forward earnings per share is $2.12. So it's a little higher than what I had there before. So they were growing, PE of 36. Maybe that is a little too good. So let's bring that down to 25. Growth rate. See, that's where I guess I could keep asking questions. How's earnings per share going to grow? So from 25 to 26, it's going to grow 8 to 10%. 8.5. So I'm at 8. So let's go with 8.5 there. All right. So we got the figures we needed, and it looks like Interactive Brokers is discounted by 28%. So there it is. AI making life different and easier. Just asking it questions. Get me these numbers that I need to calculate this valuation. Interactive Brokers discounted by 28%. Brought to you by Gemini. So thanks for asking, Ben 10. All right. So Owlet provides digital parenting solutions in the US, UK, and internationally. The company offers a digital parenting platform that provides real-time data and insights to parents. It also provides sock monitors, including Dream Sock. Oh, yeah, I've heard about this. This is for infants. Dream Sock, a wearable infant health monitoring equipment with pulse oximetry technology that tracks vital signs. Yeah, I've heard of this. And last time I looked at this, it just didn't have, it wasn't a big business. It was like kind of a niche business. Totally get it. And I could tell you firsthand, I have 2 sons and we took care of them as well as we could. And we, bought stuff, take care of our sons. If this was out back in the day, we would have bought it for sure. Let's see how they're doing. 1 year. Wow, look at that. 254%. Wow, look at that. A couple wows there, huh? So the stock came out and everybody thought this is going to be a home run. And then it dropped from 140 to $4. And then it's up a lot because it went from $4 to 16. So it was all a matter of the price was kind of the stock was priced as if this business was just not going to exist, but it has existed for sure, right? So it's a $438 million market cap, tiny market cap, revenue of 99.64. All right. And if we look at their growth in the trailing 12 months, growing by 26%. They're not making money yet, net profit, but I'd like to take a look at their margins. And their margins, gross margins are 52%. That's a healthy gross margin. You see how they're growing it as they become bigger. And they are unprofitable because they're small. The stock's gone up so much, will it continue to go higher? It could. Let's double check the balance sheet on a business like that. We want to make sure they don't have a bunch of debt, and they don't. They're close to even. They have about as much cash as they do debt, so that's good. Okay. So balance sheet's okay. The forecast, let's see how many analysts are covering the stock. Oh, good number, 7, and then 5 for 2027. They're expecting they're going to keep growing at 22%, eventually becoming profitable in the 2027 year. So this one here looks like it's it's not going to be an investment that I'm going to make because it's growing well, but it's not like crazy growth, like 100% or 200%. Um, I think the investor that saw this and understood it and invested here made a killing, just did great. But now the stock's priced as if, you know, again, it's already experienced that growth. It's going to continue to grow. Yeah, this is just too much, too risky. If they see a slowdown in their growth, we're going to have problems. They could also get disrupted by some other technology that comes out, and then they're done. So that's how I'm thinking. This has been a real big success story. If somebody owns it, congratulations. You made a boatload of money. Good for you. And you really started to see this stock really work back here. So good job. It's been a phenomenal success story. Outlet, just killing it. Thanks for asking, Ben 10. All right, so we've got somebody asking about CAN, and I could look at CAN. What is CAN all about? Is it Canon? Canon engages in the research and development, design, sale of integrated circuits. Stocks really sold off. Wow, it's under a lot of pressure. Really small cap. And am I looking at the right one? So 2 questions. Am I looking at the right one? And then I'll let you decide if you want to buy a $5 super chat. If you buy a $5 super chat, I'll do the full valuation. If not, we could just take a look at it high level. No big deal. But confirm, are we looking at Canon is what you're looking for? I'm willing to guess that, yeah, that's the case. So let me know. Michael Anthony, did you listen to the Fed minutes? What do I think? I think the Fed, it's not like I guess it's not clear if most of the Fed is going to be a bunch of hawks or a bunch of doves. I think there should be a good mix. Have some people that are always like hawkish, some that are dovish, and make sure that you don't set up any blind spots to the policy making. What I'm seeing is you just have some dissension. I still think interest rates are going to drop next year. And the reasons for it is there's the inflation problem's not a big issue, but I think that, hey, Cody, thanks for becoming a member. Thank you so much. And let me know which stock you want me to look at. So on interest rates, the unemployment is becoming an issue, and you don't want unemployment to become a real bad issue. So I think they're going to keep the economy moving, and they can do that with lower interest rates. And that's what I think is going to happen in 2026. There's going to be a new chairman of the Fed, and it's reasonable to expect that this chairman is going to have a preference to keep interest rates low. And that's how the person got the job from the president, who really wants low interest rates. So, all right. So, Cody, please email me. I'm going to type my email address in the chat here. I could send you an email, give you all the perks that are coming your way. Thanks for getting signed up. I appreciate it. And let me know which stock you'd like me to look at. Be happy to do that. We can look at a stock of your liking, and you can come back to other streams and ask for stocks to be reviewed. And you'll get perks, which will include access to videos. I'm producing videos for members only, and when they go public, they've been out for, or they've been published to you to members for about a month, sometimes longer. So sometimes you get a video if you're public, and wow, that was a good idea a month ago. That was research done a month ago, and I'm just trying to make it so that if you're a member, you're getting value, and those are the levers that I have to pull, is sharing my research to those that are willing to pay for it, and on live streams, analyzing stocks to those that are willing to support the channel. So I appreciate you becoming a new member. Please get me your email. And on this live stream, let me know if you have any questions or if there's a stock you'd like me to look at. Okay, so we looked at Owlet. That was interesting. And we'll see if I can get a response on Canon. All right, so what's going on with the stock market? Let's take a look. All right, so pretty much where we were at before. And the market's pretty flat. The smaller caps are under more pressure, but pretty flat. Nothing overly exciting to report. All right. So, as you guys have heard on other streams, put together a contest, and all kinds of members, non-members, anybody who's, you don't have to be a member to participate. We have a long list of stocks that have been picked as the stock that that individual, in this case here, Carl M, thinks BTBT is going to be the fastest appreciating stock in 2026, measured by percentage. So that's a pretty good pick, by the way. It's a small cap. They're moving from being a Bitcoin miner to being a cloud infrastructure play. So if it works, that thing could go up 100, 300%. And whoever wins the highest percent for the year, of course, gets bragging rights. But you also get a free subscription to Stock Analysis. And I'm going to give out prizes at the end of each quarter. So at the end of the first quarter, you'll get a subscription to Stock Analysis. Second quarter, subscription. And then the fourth quarter, the number one player, we'll see if I can do more than just, in addition to the Stock Analysis subscription, see if I can add something to sweeten the pot. But have some fun with it. Just pick a stock. If you haven't made your pick, you have roughly a day and a half to go, because I'm going to go final on the list once the stroke of midnight for the year, right? Tomorrow night at midnight, all submissions are final. And we've got some interesting stocks out there. And let's take a look at the best performers for this year, 2025, that have been picked. ALM, this has been an incredible stock. This is like a mining company, and they mine, what was that material they mined? Tungsten, which is used like in equipment. It's a very hard material. It also gets used in like semiconductors. So this one here is up so much in a year, 850%. Incredible pick. That's Genetic Smite. Iron, this is a cloud infrastructure company. So it's been doing great, doing just fantastic. Will the whole AI story continue? Will it take these stocks higher? This is an integrated data center business. There was some news around data center with SoftBank acquiring a data center. I believe the news was released today. And you see that it has been under some pressure, for the last 2 months. This has been under pressure. Will it continue to be under pressure and go down, or will it really go up again and make Trev Byrne one of the competitors near the top? And then Juicy picked Nebius, which is the same business, up 207%. Dave went up 155% year to date. And that stock it does financial services, and it's kind of like a new generation financial services company. I think it's a really neat business, but it's kind of flatlined for like the last 4 or 5 months. It hasn't really gone anywhere. So will it begin to flourish? We'll see. Now, the stocks that maybe are on the opposite end and have been just really beaten down and are priced really low. Like we saw this stock for this little company, right? No, it was Owlet. Owlet was the example that I want to go to. So Owlet, if you look at the 5-year, this thing was trading at 140, and then it dropped to a really low price, and now it's just killing it, right? Because it was priced so low. So there's a different way of playing this contest. Hey, go after a stock that's really trading low. And if it comes back, maybe it goes up 100, 200%. The Trade Desk, Save On Trading, is going with the Trade Desk. And they do ad tech. They compete with AppLovin and other companies that do ad tech. Gambling.com. Paul's going with gambling.com. Real profitable, growing company that provides data to gamblers. They don't take any bets. They just provide, it's more of a social app. Strategy. Peter's going with Strategy. Now, if Bitcoin goes, Strategy is going to be a big winner. And Bitcoin, as I showed earlier in the stream, it's been under pressure. It hasn't been doing all that great. United Healthcare. Look at that. Then BTBT, this has been beaten down, but this is similar to IREN or Nebius. So what if investors really pay attention to BTBT, or if they get acquired? Maybe Carl's onto something here. So let's have some fun with it. And I'll track the stocks that we have that have been picked. I'll track them at the end of each month. We'll kind of do maybe the stream or a video around, which stocks are leading the race to the top, to being the number one percentage gainer in the stock market, U.S. stock market. So the rules are pick any stock that's listed on the U.S. market, and it can't be already picked by somebody else. And for example, Baba's already taken. We talked about IREN, Google, Delcath, Mercado Libre, Meta. Those are already been picked. So have some fun with it. You can message me your pick however you'd like. You can go on a video and comment on it. You can email me however you'd like. Let me know. All right. So what's going on with the stock market here? We are closed, folks, and we closed lower. So the market is playing it safe as we near the end of 2025. It is definitely playing it safe, not taking any big chances, waiting for 2026 to begin. And then I think we're going to have a little bit of a sell-off to begin the month. I'm sensing that investors are up big on some of these stocks like NVIDIA, Broadcom, and others, and they may offload some of their shares so that they can recognize those gains and not have to pay taxes right away. We'll see. We'll see if that theory has any merit at the beginning of the year. All right. So let me mention so if you're not a member yet, It's a good program. It has 4 levels. If you just want to come on streams, request videos to be analyzed, become a value member. If you'd like to get access to the tools that I use, that valuation model you just saw, become an advanced member. You also get invited to Discord and to member calls. If you want a lot of research done and you want a 30-minute call once a month, super investor. If you want a lot of research, platinum investor. I'll do 3 stocks, full analysis, recordings, full valuations delivered to you, real-time access to my trades, platinum investor. So depending on which level you go with is the access you'll get. And please consider it. All right. So I wanted to stream during the market day. It looks like I'm not getting any more requests. Thanks again to Cody Redinger. Thanks for becoming a member. Please get me your email address so that I could get you all the perks. And if you want videos, if you want stocks covered on the streams, either during the stream or before the stream, get me the stock symbol. I'll be sure to put it into the stream agenda. I'll be streaming tomorrow morning at 9 a.m. Eastern with Daryl. I'll be doing the fundamental research and Daryl will be doing the technical analysis. Join us if you'd like in the morning. Tomorrow will be the last trading day of the year. We've made it to the end of the year. Awesome. And then we will begin trading in 2026 on Friday, which will be January 2nd. We will not trade on January 1st because it's a holiday and the stock market will be closed. And we will have our first trading day on Friday. The next week, all 5 days will be open for trading. I think next week is really when there's going to be a lot of volume and you're going to see a lot of selling, but we'll see. All right, guys. Well, thanks so much for tuning into my live stream. I'm going to go ahead and end the live stream. And thank you for your attendance. Hopefully I see you tomorrow on the live stream. This is the last time I get to speak with you. Let me wish you a happy new year. Let me also wish you a very, very prosperous 2026. I hope your investments really work. Hope your trades are successful. And I hope you have some fun while you do that. I also hope you come back. You become a regular on my streams, watch my videos, become a member that is more involved. I think it's a good community. Everybody's learning. Everybody's getting better. And it's been a lot of fun to be a part of it. So everybody have a terrific afternoon, evening, and I will talk with you soon.